All right, guys, welcome back to the Daily Stock Market Digest. So, if you look at the headline indices yesterday, you will assume that everything is perfect. But if you look under the hood at some companies that reported their earnings yesterday, we are actually witnessing a market that is simultaneously hitting all time highs and ruthlessly punishing imperfection. So, let's break down exactly what happened yesterday and why the rules of the game have shifted overnight. First, the headline numbers. So we can see that the bulls were firmly in control yesterday. You can see that the S&P actually climbed half a percentage point to close at close to 7,000, right, which is that previous all-time high, whereas the Nasdaq outperformed as well, gaining about 0.9%. So on a daily move, right, close to 1% is considered a very high move, whereas you can see the Dow was moving sideways, not so much as well. And we did see a little bit of volatility from the VIX coming back as well. Now, this wasn't just a drift that went higher for no reasons, because it was kind of a coordinated rally that was sparked by the snap election that happened in Japan just 2 days ago. So we saw that the Japan index, the Nikkei 225, actually rise close to 4%. And this was a direct response to the first female prime minister, Sanae Takaichi, landslide election victory, which the market interprets as a green light for aggressive economic stimulus. Now, and we are also clearly seeing this sort of clear resurgence across the tech sector. Look at investors are actually buying the dip in leaders like Nvidia, like Broadcom. Like Nvidia was up about 2.5%, Broadcom 3%, and actually previously on last Friday they were actually up higher. So you can see that fears over AI spending are beginning to ease, which effectively erase all the selling pressure that we saw last week. Okay, so you can see that the S&P scores back-to-back gains as tech rises, and Dow actually touched new record once again. And if we look at the macro pulse about what the Federal Reserve are saying, so we didn't hear any new news from Kevin Walsh, we didn't hear any new news from Jerome Powell, but we heard something from the Vice Chair Jefferson, where he is basically prioritizing labor market health. Whereas another Fed person, Mary Daly, also signals open to adjustment but cautious, right? So we can see that while the officials believe the current policy is well positioned, the path forward is still remains data dependent, like what Jerome Powell have seen. And inflation will serve as the ultimate decider for future moves. And this week, what are we going to get? We are going to get the core CPI this Friday as well. Okay, and when we look at the bond markets, right, the bond market actually there was some drama as well, where the 10-year yield spiked close to 4.2% before actually even higher, 4.3% before now sitting at 4.2%. So this was actually triggered by reports that Chinese regulators are asking their companies, right, to curb US Treasury exposure. So while this could actually disrupt liquidity, you can see that in terms of the overall market, it proved resilient. And before the session ended yesterday, it actually absorbed the shock. But you can see the bond market, it was an initial knee-jerk reaction, but it kind of recovered slightly after that. And of course, how can we forget about digital gold, right? So Bitcoin now is sitting just below 70,000. Actually, over the weekend, it actually went up to 72,000, right? From a strong recovery of a low of 60,000. So crypto trade, people will see it as initially it was like the digital gold, right? So it's meant to be like a risk-off asset. But we are seeing that crypto is actually a risk-on asset, right? It's trading in tandem with the broader stock market. So interestingly, right, while the price holds firm, we actually saw institutional ETF inflows remain strong as investors are seeing and being a bit more cautious about crypto moving forward. Now, moving on to companies' earnings yesterday, we had some pretty interesting ones announcing yesterday, some good, some bad. And today we are going to break down three of them which you should pay attention to because it might actually affect your investments indirectly or directly. The first one is Monday.com. Now, I'm pretty sure some of you might have seen it on your YouTube advertisements on Monday. They are actually pretty aggressive advertising on YouTube. But their results were actually pretty confusing. Let me explain. So, on the surface, right, you can see that it was a victory lap with beats on both the top line and bottom line. Full year 27% growth, Q4 revenue 25% growth. EPS also beats expectations. But what happened to their stock price, right? It actually dropped 20%. And even the CEO said that their disciplined execution and there were also rising adoption of the new AI products, but it still dropped 21% because of the fear that we saw the market being concerned last week. So this disconnects, right, actually highlights how sensitive the market is, not to how the company has performed in Q4, but what the company is guiding ahead. Because the sell-off that we saw in Monday.com, right, it was not about them beating the results, right? It was because of their weak guidance. So kind of like a valuation reset triggered by this. So they actually projected much lower growth, roughly, if I'm not wrong, was about 18 to 19%. So with a much slower growth, especially when AI is the next big thing, right? This is kind of like a death sentence, especially for software stocks that were trading at very high multiples. So in the software world, this is what they call the deceleration penalty. Okay, when the high multiple stock slows down, right? This is where you will see this kind of sudden plummet. Now, to understand deeper, right, how a company might be disrupted by AI, so I created this AI resilience analysis tool that dives deep into the company. So you can see the scoring rating is upon 10. So 1 means not resilient at all, 10 means very resilient. And as you can see, Monday only comes in at a 3.7 out of 10. That means it is not super resilient to AI disruptions. So you can see that they are at a critical inflection point where previously its greatest assets, right, it is now going to become their greatest liability in what they call a headless AI world. So the company is actually trying to move up market to larger enterprise customer, but when you're dealing with huge companies, right, this transition will take time. It is not immediate, and their resilience actually depends on entirely on shifting from a manual, human-based work process that manage work to a platform that manages the AI agents doing the work. So looking ahead, right, what is the key catalyst for them? It is the adoption rate of their new AI work capabilities. So what they call it is the Monday vibe. But it's very important to watch for the risk ahead, including foreign exchange headwinds. And we also want to see customers converting and more partnerships that comes from them. Otherwise, right, do not be surprised if you start to see the resilience score dropping. And until then, where we see the guidance accelerates, this stock remains what we call the penalty box. Okay, so this is the first company. The next one we look at Chegg. Okay, a company fighting for its life in the age of AI. So Chegg, if you don't know what is Chegg, right, they are actually the company that helps you to solve math questions, right? So you might have seen it before. Maybe your kids might have seen it before, or even tried it. So think of it as if you have any questions about your homework, right? You can actually submit on their website, and you can actually get help from them. And they also have online tutoring, digital and physical textbook rentals. And they actually, last we saw, right, they have close to 7 million subscribers. So that is a lot. And they technically, right, they beat expectations because the bar was very low. And what they are sharing now is they are pivoting away from academic services, which has been decimated by free AI tools. Right now, by using any AI tools, you're able to get answers to your homework right away. And as you can see, right, how did the stock perform based on their earnings results? It's actually dropped 5% on the day, and as well as after hours after the earnings, it's also dropped another 6.7%. So the CEO Nathan Schultz has already shared that he's want to move the company towards workforce skilling, but this transition is actually a race against time. And you can see the last part, right? The stock price at 80 cents. So in the New York Stock Exchange, right, if your price is below $1, right, you have a risk of delisting. So now they, apart from transiting towards workforce skilling, right, they also have to make sure that they find a way for the stock price to be above $1 to prevent delisting. So they are in a sort of a very, very tricky situation right now. And using the AI resilience tool, right, you can see that Chegg came in at 2.2, right? So Chegg is a, a primary case study of a legacy business model being destroyed by AI. Literally, for something that was built over the last 10, 20 years, right? Within 2 to 3 years, it's been totally disrupted by AI. Okay, so they are currently trapped in this transition. And the market has really brutally re-rated the stock because their utility now is not their greatest asset. It has now become their greatest liability. And despite growth that we saw in their scaling unit, right, their legacy academic model just cannot compete with all the LLMs, AI LLMs that we are seeing right now. So until they can prove their new strategy works, we can see that the company is facing a lot of risk right now. So this is the second company. And the third company is Dynatrace. This is a very interesting company. They are AI-powered cybersecurity platform designed to simplify complex clouds environments, platforms for a lot of companies. And they deliver what I would call a triple beat. Okay, what triple beat? Exceed high end of guidance, massive AAR growth, gap operating profit, new share repurchase program. So they actually beat on earnings, revenue, guidance, also raised even higher, right? And the most important metric here is their annual recurring revenue grow by 16%. And this stability is exactly what investors are looking for in a SaaS company, okay? And how did the stock price react, right? They actually went up by more than 10%, and it's also because of their buyback authorization, which was also a very real catalyst. Because when a growth company commits $1 billion to buy back his own shares, right, it sends a very powerful message to the company's cash flow as well as the valuations, because it kind of is a signal that the management is very confident in their future. And when we use the AI resilience tool and see their scoring, right, a very solid 7.5 out of 10. Okay, 7.5 out of 10. So they are like an arms dealer. They are not a victim of being replaced by AI, but in fact, they are a very important infrastructure tool. So Dynatrace is benefiting from the explosion of AI, and I would say not just the Dynatrace, but the general cybersecurity space. Think about it, as AI become more of a mainstay, the importance of having a secure environment for any workspace, any company, right, is even more important. You know, years ago, right, for this kind of cybersecurity software, right, it was a luxury. People would think like, if I have it, it's good. Like, and over the years, it's been getting more and more important and compulsory and mandatory. But with AI, right, this has proved that if you don't use any cybersecurity AI tool or platform in your company, right, you face a very, very big risk. And the risk is not just losing data, it might mean losing millions of dollars. So in Dynatrace's case, right, they are becoming like what we call the air traffic control for the AI economy, ensuring that all the systems that are being run for the company remain reliable and efficient. So these are the three earnings. And if there's one brutal lesson to take away from all of these three, it is this: that Wall Street do not care about what you did yesterday. It only cares about what you promise for tomorrow. And this applies to every single company out there. Whether the company beats earnings or not, right? If your guidance shows a downward trend or is not strong enough, the company will sell off. So what you should do, right, as investors, right, for the companies that you're in, is not just to focus that, oh, the company beat their guidance, it is wonderful. But you want to focus on what the management is saying. What is the forward-looking statements provided by them during their call? Now, more companies are reporting today, which should give us even more idea of how the economy is, right? We have Coca-Cola, and Coca-Cola is kind of like the proxy for inflation. Are consumers still accepting price hikes, or do they not want to spend anymore? So we also have Robinhood, which we will see will basically affect the crypto market as well. And we will see Spotify. So Spotify is a gauge for discretionary subscription spending, and as well as Datadog, which is in a way the bellwether for the entire enterprise software ecosystem. So very interesting. We also have Fiserv coming up and many more, and I will cover some of them in tomorrow's daily stock market digest. And in terms of macro events, right, today we will have retail sales, but more importantly, right, we will also have core CPI on Friday, which I shared earlier. In between then, we have some unemployment data, which actually appears every week, the claims, but unemployment rate will be something that is also important to monitor, because if you remember what the Fed dual mandate is unemployment as well as inflation. So these are the two things that the market will be looking at, and this will dictate the Fed's interest rate path ahead as well. So if the data comes in hot, what does hot mean? If unemployment becomes higher, or inflation becomes higher, so do expect to see some sort of immediate pressure on the stock market. All right, that's all for today's stock market digest. So if you enjoy this, drop a like or comment down below. I would really appreciate it. So I publish new videos every day. Do subscribe to get notified when it goes live. And I'll see you in the next one.